Hello everyone and welcome to XNES's weekly market outlook. In this video we're going to be discussing the key idea for trading over the next few days, some of the narratives behind that, and what traders need to be aware of so that they can hopefully execute the idea successfully. I'm Michael Stark, Financial Content Manager at XNES, and joining me today is Stanislav Berechov, Trading Specialist. Welcome Stan, thanks very much for joining us.
Hello Michael, thank you for having me today.
What's the idea for this week for the potential trade in the next few days?
I think that the best idea for this week is going to be gold. We see that we have the long anticipated pullback for gold, which had started actually in July 21, but we have very notable buying activity here. And also, other than that, we see that gold is fueled by the decline in American dollar, which is declining because of the softening expectations, because we had the negative number for GDP for the second quarter for the United States, and that alone gives some softening for hawkishness of Fed. And as a result, American dollar and Treasury yields are moving down while gold is going up because they have inverse correlation. So that's not only a technical play, but also might be a fundamental play driven by weakness of American dollar.
So the key narratives that we have going on for this is, of course, the technical recession in the USA. Is there anything else important that's driving this movement upwards, possibly by gold?
Yes. First of all, you can see that Treasury yields are declining. So they peaked in June 15, after the first summer meeting of Federal Reserve. And since then, they are only declining. Also, that gives some weakness to American dollar, and that's a most clear narrative now.
And over the next few days, what of traders to be aware of? What do you think are the main events on the economic calendar that need to be monitored if you're going to try to execute that idea?
So first of all, we see that we have some also geopolitical escalations between the US and China, as well as in Europe, in Serbia and Kosovo. Probably, we hope that nothing will happen, but usually markets react on such things. I mean, buying more gold as a protection against geopolitical risks. So this is another factor which drives the gold higher. As for the economic calendar, the obvious release, which is long awaited by traders, is non-farm payrolls and unemployment rate. It's very important because a labor market is probably the only thing which is strong in current conditions. Also, Jerome Powell had claimed that, we have the decline in GDP, we might have decline in GDP, but labor market continues to be very strong. Unemployment is on the long-term low, and that alone is a big factor that actually keeps economy above water. So, of course, traders will very carefully monitor for publication of non-farm payrolls, and in case it misses expectations, we might see substantial volatility for equity markets and for crypto markets.
In summary then, the idea we're looking at this week is a possible move upward for gold after having first retraced perhaps lower to around 1,750. And the key narratives that are driving that are the technical recession in the USA with declining GDP and the less likely hawkish outlook for the Fed in September and later in the year. And this week, traders, of course, do need to be aware of the NFP, but also possible geopolitical tension between the USA and China and in Europe over Kosovo. So thanks very much, Stan, for joining us and giving us the idea and the background for it in this video.
Thank you, Michael. Have a good trading week, everyone.